So Tesla stock has been falling off of a cliff, but in this video, I wanted to go ahead and share some additional data with you guys that is a bit concerning, and it's absolutely something that you're gonna want to pay attention to regardless if you're just trading Tesla in the short term or if you're investing in Tesla in the long term. No matter how you're participating in the market, this is something that you should absolutely be aware of. Now, the first thing that we should be aware of is exactly what these institutional investors are doing, because according to FINRA, institutional investors account for over 70% of the trading activity in the stock market. And so these big ballers on Wall Street have a huge influence on where the direction of price goes for these stocks, because if they're selling a lot of stocks, well, that means that could cause prices to fall down. And so when we take a look at what institutional investors are doing, we see that hedge funds have reduced their net linked and mega cap stocks, but have been selling other US stocks at a much faster pace. So to really just simplify this, the black line represents the big seven, which is Microsoft, Apple, Google, Meta, Amazon, Nvidia, and of course Tesla. And we see that there has definitely been some selling taking place. Obviously, we see a little bit of a push up in October, but it looks like more selling is about to come. But when you look at the blue line over here, which is the S&P 500 excluding the Magnificent Seven or the Big Seven, we see that investors, or these institutional investors, have been selling a lot of stocks. Now, this makes sense, especially because for a while now I've been talking about how the 10-year treasury is at a level that we have not seen for the last 16 years. In fact, if we take a look at the 10-year treasury, we see that if you go ahead and put capital in the 10-year treasury, you can get a guaranteed return of 4.9%, which takes away appetite from the stock market. This is an equity risk premium, something that I've been talking about on this channel for quite a while. But I want us to go ahead and turn our heads to look at the macro picture and look at what's going on with the leading economic index. It has contracted for the 18th consecutive month in a row, which is pretty much on par with what we see historically going on when a recession is coming. In fact, when you go ahead and parse through what contributes to the leading economic index, you see that pretty much everything has been falling down, with the exception of jobless claims actually providing a little bit of a positive, as less people have been filing for unemployment claims.
It's happening.
And so this does not give us a healthy picture for Tesla stock or pretty much the overall stock market, as economically things are not looking too well. But one thing that we have to understand is that in the stock market, there is always an opportunity around the corner. For example, if we go ahead and take a look over here, we see this is ticker symbol LMT, which is Lockheed Martin. And we see that back in February 24th of 2022, it had a major spike up, because this is when the war with Russia and Ukraine initiated. And a lot of these defense contractors benefit a ton when war starts, and we have aid supplementing a lot of these countries. In fact, if we take a look into a more recent time frame, we see that over here, the current crisis in the Middle East began on October 7th of 2023. And once again, we see LMT push up, because of course, when there is war, a lot of these defense stocks push upwards. But I want to go ahead and point out to something that you guys should absolutely be watching, and that is the fact that Biden is requesting Congress to go ahead and initiate a $106 billion funding package for Israel and Ukraine. And so if this actually gets passed, we could see more defense stocks like LMT and a few others still continue to rise up. And to put it into perspective, so far we've sent over $76.8 billion to Ukraine. And so what I'm trying to say is that this package that Biden is asking Congress to approve is significantly bigger than what we've already sent Ukraine so far. And if you see this graph, it breaks down where a majority of the money goes. In fact, we see that a lot of it goes to security assistance, weapons and equipment, and of course grants and loans for weapons and equipment. And so what I'm trying to point out here is that we're seeing a lot of selling pressure take place with not only the big seven tech giants, but as well as a bunch of other stocks in the overall markets. However, I'm also saying that money is still flowing into a few different sectors, and right now is the time where you have to be extremely cautious and selective on where you deploy your capital, because right now we're seeing a lot of pain in the overall markets for a majority of the stocks yet, that, we're seeing opportunity in a select few stocks. But I want you guys to also take a look at this chart over here depicting the S&P 500 forward earning yield to the 10-year treasury yield. And what we're seeing is that right now is probably the lowest time that we've ever seen for appetite in the stock market. And so once again, this is why I've been telling the Push and Profit private group that you have to be very selective, especially in times like this. But with that said, I want us to go ahead and hop into my laptop. This way we could go ahead and take a look at Tesla stock as well as the overall markets from a technical perspective, and also cover some additional topics that are important as well. However, before we go ahead and hop into my laptop, make sure that you guys check out the comments in the comment section of this video below, because there's going to be a pinned comment for my free weekly market post insights, where every single Sunday I send out an email talking about what's currently going on in the overall markets and what are some things that we should absolutely be aware of. So again, it is completely free, so make sure to check out the comment section below. And with that said, let's go ahead and hop into my laptop. Alrighty, so we are officially in my laptop taking a look at Tesla stock, and recently it has gotten pretty ugly. Now this is exactly what I warned about in just a few videos prior. Now, I'm not trying to give myself a pat on the back. I'm not saying I have a crystal ball. What I'm just trying to say is that a few videos prior, I said that, hey, Tesla at these levels is pretty dangerous. And I mentioned that, of course, yeah, we're looking at things from a fundamental perspective, also from an economic perspective, but even from a technical perspective, just looking at the charts, I mentioned that, hey, there's very little volume relative to price over here on the volume profile. And when there's little volume relative to price, that means that there's less exchanging between buyers and sellers. And so if we were over here and we're falling below the shelf with little volume relative to price and there's selling pressure, well, that's going to amplify the selling, and it's just going to fall down. It's going to capitulate. And that's exactly what we saw. And I want to flip the script real quick. In fact, I want us to pay attention to when Tesla was pushing upwards. Notice that when there was little volume relative to price and Tesla was pushing up, there was buying pressure. Well, it pushed up drastically. Why? Again, there's very little exchanging between the sellers and the buyers. And so if there's only buying taking place, it's going to push upwards. However, when you see, as we go over here at this shelf with a lot of volume relative to price, that's where you see consolidation, right? Because now we have the buyers and the sellers step in. And so that's why we saw a lot of selling pressure. And so, you know, I try to, let you guys know on the channel that I don't consider myself a technician or someone who only looks at the chart. I'm not a chartist. I like to look at the markets from a holistic approach. I like to look at the fundamentals, which is why we talked about the earnings for Tesla. I like to look at the economic picture. And of course, I like to look at somewhat of the technicals. I'm not a big fan of the technicals. They don't hold that much weight. But it is a data point you want to watch. And I do want to warn you guys, be wary or be careful of the individuals on X.com, formerly known as Twitter, or even on YouTube, where the only type of analysis that they do is technical analysis. Why? Technical analysis is the easiest analysis to do, but it's also the one that holds the least amount of weight. In fact, if you ask a lot of these individuals who only do technical analysis, you say, hey, why is the market falling? They just simply tell you, oh, well, it broke this squiggly line over here, so because it broke this line over here, it's going to fall down. They have no understanding of what's going on fundamentally or just from the perspective of the overall economy. And so, yes, I do look at the technicals, but I bridge it together with the fundamentals and the economic picture. And that's why I talked about the leading economic index in the beginning of this video. It's not looking good. In fact, I want to show you guys another economic picture over here. So right over here, we have this chart showing people holding 2 full-time jobs, and it is hitting a level that we have not seen in decades. I mean, this is all the way over here, 1995, and I want you guys to let me know, does this sound like a good sign for the economy? Let me tell you, people hate their jobs, and so for an individual to get 2 full-time jobs, it's not for fun. Let me tell you that, right? It's out of necessity, right? Things are very rough, and so when you see this going up, that's not a good sign. And what makes things a bit scary over here is that we heard central bankers just recently, right, members from the Federal Reserve say that they expect the labor markets to soften and weaken going into the first quarter of 2024. And so that's scary. Why? Well, right now, of course, luckily we have a lot of demand for labor, and so that's good. That's the only thing that's keeping us out of a textbook technical definition of a recession. But what happens when that weakens? Well, that's very bad, because then if people lose their jobs, they can't buy. If people can't buy, well, that bleeds into corporate earnings. And so this is what Elon Musk kind of warned us about in the recent third quarter earnings call for 2023. And so we are at a scary level. Now, you guys let me know if you guys know anyone personally, if you guys have any anecdotal stories of maybe your neighbor, no, just anyone you know working two full-time jobs. I mean, this is not a good sign. Now, another sign over here. Startups shutting down, okay? Startups don't do well in a high interest rate environment. In fact, we saw that taking place in 2022, but it got amplified in 2023. And I believe that as we go into 2024, the first half of it is going to crush a lot of startups. It's hard to raise capital at a time like this. And so that's why I say, hey, you want to look at the fundamental picture, but also the economic picture, and then tie it into the technicals, right? And so, right now it's not looking good for Tesla. Now, I want to just pan over to the overall S&P 500 index ETF. And again, we're looking at things from a technical perspective. Yes, I know. I just talked about how I don't like them, but it is just a data point to watch at certain times. And so we see that we have this bear flag over here where basically we are seeing selling pressure. We bounced up in October, which, by the way, also in the beginning of the month for October, I told members of the Push and Profit private group, also publicly on this YouTube channel, that I believe we were going to have a provisional uptrend for October. That's exactly what we got. Again, not trying to say I have a crystal ball. I don't, right? I don't know what's going to happen. I'm just like anyone else, but I just look at the data, right? Historically, October has seen some bottoming. And so that's why I mentioned that I believe October is going to have a push up, but it was going to be temporary. That's exactly what we got. So if you're, subscribed to the channel, then you might have seen that, right? I don't delete videos I've uploaded previously. I think it's important to really hold and stand behind what you say and keep it on record. I don't just flip-flop every single day. I talk about what I see and I hold my stance on it, right? Now, if there's data showing that maybe I do have to switch, well, then I'll tell you what I'm seeing and I'll tell you why. But I said that, hey, we're going to see this temporary uptrend for October, but I don't expect it to last. And now we're seeing some selling pressure. We're seeing this bear flag pattern, and we're actually breaking below this descending trend line on the overall S&P 500. Not a good sign. But let's go ahead and switch back to Tesla, and let's talk about it, right? So as you guys, or if you're not familiar, right, I didn't mention it in this video, but I mentioned it in a lot of my other videos that I am a long-term bull for Tesla. I invest in Tesla in the long term, but I also have a separate trading account where I trade Tesla going up and down. And it's important that I go ahead and emphasize that because a lot of individuals get that wrong. Oftentimes when I am talking about Tesla going down, a lot of people mistake me for a bear on Tesla, and that could be the furthest from the truth. I'm still bullish on Tesla in the long term, right? And I get a lot of mean comments. YouTube filters some of them, especially if there's profanity. Luckily, I have a lot of thick skin. You have to if you're going to be on YouTube, right? But when I seem to talk about Tesla going down, I get like ugly comments, right? And I want to let you guys know, yes, I'm bullish on Tesla, but right now things are not looking good. In fact, in my trading account, this has been one of the best months I've ever had in a long, like I don't even know if I had a better month than this. I did 127% in my short-term trading account so far for the month. And I actually made a shorts, like I uploaded one of those short videos on my channel. Not a big fan of uploading shorts. I'm trying to get a hang of this whole YouTube thing, but I did upload a short showing you guys 127% for the month. So I've been killing it in my short-term trading account. Why? Well, when there's selling pressure like this, and things are just falling straight down, I mean, it's just easy to make money. When things are very directional, it's easy to make money. When you're over here where things are going up and down, that's when things get challenging. So things have been falling down. So killing it on the short-term trading account. Obviously, my long-term investment portfolio is it's screaming in pain, right? But of course, as a long-term investor, you have to be able to withstand these times when things are selling off. Tesla, I mean, luckily year to date, Tesla has rallied up a tremendous amount for 2023, so it's not terrible. But yeah, my long-term portfolio is pretty, bloody right now. But of course, I'm not going to sell. I don't plan on selling Tesla in my long-term portfolio. I'm bullish on Tesla for 2025 and 2030. Of course, I may change that in the future, but right now, I still believe that Tesla has the lead in EVs. I'm very optimistic for what they're going to be doing in energy. We see a lot of new companies or established legacy companies joining this Tesla supercharging network. So I'm bullish, and I don't plan to sell, right? I'm actually looking for the area to buy, and one of the areas I'm looking for now is currently around this 180 level. Do I expect Tesla to touch it? No, I don't. Again, I don't have a crystal ball, but I'm going to be monitoring what's going on. And so we see a lot of volume relative to price. So that's typically where we see the next support level. We see that there was a little bit of a gap over here. So perhaps Tesla may fill that gap again. But those are the areas that I'm looking for my long-term portfolio. If Tesla touches these areas over here, I'm not just going to buy just yet, just because it touched in the area, because a lot of people, that's a mistake. They go ahead and they say, oh, well, touch the support, it's going to bounce up. No, you can't assume it's going to bounce up. You have to wait for the selling pressure to hit that area and wait for that confirmation of an uptrend. That's something I talk about in the Push Your Profit private group. And so that's what I'm eyeing or have my eyes on in regards to Tesla in my long-term portfolio. Yes, I may sound like a bear right now talking about how I'm making a killing shorting Tesla, but I'm still bullish. It's just to hedge my long-term portfolio. Again, you have to understand that you're going to want to hedge, right? There's several different ways. Some people buy puts as an insurance for their long-term portfolio. I prefer to have a short-term trading account where it's just completely separate. Some people sell calls. I mean, there's so many different ways to play the market. It'd be wrong for me to tell you exactly what's the way to do it. And it's also wrong for me to just... I'm never here telling you guys what to do. I just want to make that very clear. You should only buy and sell or trade, invest, whatever you want to call it, whatever you're doing, whatever your goals are, in something that you see value in, not just based on what I said. I know I talked about how I've been right several times for this year, right? But just because I've been right so many times since, if you're part of the Push and Profit private group, I've been pretty much calling things out since 2022. Right? But it's just because this is something I have experience on. I mean, for fun, I read 700-page books on macroeconomics and monetary policy for fun, right? That's not normal. And also, the background, finance, etc., right? Doesn't mean I'm going to get it right all the time. And I want people to understand that. I don't want to see comments saying, oh, Justin, I bought because you said this or I sold. No. You shouldn't. You should never buy because I said this or said that. I say what I'm doing, but that's just what I'm doing. I know how to manage my risk. You should only do whatever you see value in and do your due diligence. That honestly is one of the most frustrating comments I could ever see. I did this because you said so. I never told you to do that. I just say what I'm doing and what areas I'm looking at. But with that said, so far in this video, I told you guys where I'm looking at for Tesla in the long term, right, to buy, and what I'm going to be doing in the short term. If we continue seeing more selling pressure, I'm going to continue shorting, right? Again, I'm not a bear. It's just something that I'm doing to obviously hedge my portfolio. But with that said, let me know in the comment section below, what are your thoughts on Tesla, the overall markets, and the economy, right? I'd love to hear your feedback on things. Honestly, it's very insightful to hear what you guys have to say. But with that said, before you guys go, make sure to watch this next video right over here. I talk about mistakes that people make as traders. But if you already seen that video, make sure to watch this next video right over here, and I'll see you guys on that next video. Take care, guys.